There is a moment in trading that destroys more accounts than bad strategies, poor education, or lack of capital combined. It's the moment right after a loss, when you feel an overwhelming urge to get your money back immediately. Not later. Not tomorrow. Your heart rate is higher. Your focus narrows. Patience disappears. And suddenly, the market is no longer a place of opportunity. It feels like a personal battlefield. Have you ever taken a trade you knew you shouldn't, simply because you were angry at the previous one? That is revenge trading. And it doesn't feel reckless when you're inside it. It feels justified. You tell yourself you're being decisive. You convince yourself the next setup is obvious. You increase your size because you know this one will work. But what's really happening is much simpler. You're no longer trading the market. You're trading your emotions. Revenge trading is not about making money. It's about repairing wounded pride. Something in you wants to erase the loss, to restore the feeling of control, to prove that you were right all along. The market doesn't respond to that need. It punishes it. Most revenge trades share the same characteristics. They are rushed, oversized, and disconnected from any structured plan. The entry isn't based on calm analysis, it's based on urgency. The exit isn't based on rules, it's based on hope or panic. Imagine a trader who just took a clean loss according to plan. On paper, nothing is wrong. Losses are part of the system. But internally, the story is different. I shouldn't have lost. The market tricked me. I need to fix this. So they re-enter, often in the same direction, often with larger size. If price moves slightly in their favor, relief floods in. If it moves against them, anger intensifies. Now they are trapped, emotionally committed to a trade that was never part of their plan. This is how one small loss becomes a catastrophic day. Professional traders understand something that beginners resist. Losses are not problems to solve. They are costs to accept. A store owner doesn't panic because rent is due. A restaurant owner doesn't chase customers down the street to recover yesterday's slow sales. They factor expenses into the business model. Trading is no different. But when you're emotionally attached, each loss feels personal, like a verdict on your intelligence or discipline. That's why revenge trading is so powerful. It doesn't come from greed. It comes from pain. And pain demands relief. Unfortunately, the market rarely provides relief on demand. Instead, it amplifies impulsive decisions. The more emotional you become, the less clearly you see risk. Position sizes creep upward. Stop levels widen or disappear entirely. You hold trades longer than planned because admitting another loss feels unbearable. At this stage, the trader is no longer thinking probabilistically. They are thinking in absolutes. Win or fail. Recover or collapse. Control or helplessness. But trading success lives in the gray area, in patience, restraint, and acceptance. So how do you escape this trap? Not by suppressing emotion. Not by pretending losses don't hurt. You escape by building systems that protect you when your discipline is weakest. One of the most effective tools is a mandatory pause after a loss. Professional traders often step away from the screen entirely, not because they are afraid of the market, but because they respect their own psychology. They understand that clarity returns only after emotion subsides. Think of it like cooling metal after forging. If you strike again while it's still unstable, you distort the shape. If you allow it to settle, you can work with precision. Another powerful shift is redefining what a good day means. Most traders judge their performance by profit and loss. Professionals judge by execution. Did you follow your rules? Did you respect your limits? Did you stop when your plan said stop? A day with a loss but perfect discipline is a successful day. A day with profit but reckless behavior is a dangerous one. Revenge trading thrives when your self-worth is tied to outcomes. It weakens when your self-worth is tied to process. Consider a trader who loses 2 trades in a row. The emotional trader thinks, I'm down. I need to recover. The disciplined trader thinks, conditions aren't favorable. Capital preservation is the priority. Same situation. Completely different internal narrative. This is why emotional control is the true edge in trading. Strategies can be copied. Tools can be learned. But the ability to remain calm under pressure determines whether those tools are used correctly. There is also a deeper layer to revenge trading that few people discuss. Sometimes the urge to win it back isn't just about money. It's about identity. You want to see yourself as competent, disciplined, in control. A loss threatens that image. A quick win promises to restore it. But sustainable confidence doesn't come from dramatic recoveries. It comes from consistency over time. Professional traders are comfortable ending a day down. They don't see it as unfinished business. They see it as one data point in a long series. They sleep. They reset. They return with a clear mind. If you find yourself stuck in revenge cycles, start by building friction into your process. Make it harder to act impulsively. Step away from the keyboard. Close the trading platform. Write down the reasons for the previous trade before considering another one. These small barriers interrupt the emotional momentum that drives destructive decisions. Over time, you'll notice something subtle but powerful. The urge weakens. Not because losses stop hurting, but because you stop reacting automatically. You become an observer of your emotions instead of a servant to them. And that's the turning point. The market hasn't changed. Your strategy hasn't changed. But your relationship with discomfort has. You no longer need immediate resolution. You can tolerate uncertainty, frustration, even disappointment, without rushing to fix it. That capacity is what separates surviving traders from burned-out ones. Before your next session, decide in advance what you will do after a loss. Not emotionally, operationally. Will you pause for 10 minutes? For an hour? For the rest of the day? Pre-commitment removes the need to negotiate with yourself in the heat of the moment. Because the trader you are during calm reflection is far wiser than the trader you are during emotional turbulence. And remember this, the goal of trading is not to win back what you lost today. It's to still be in the game months and years from now. Capital can recover. Confidence can rebuild. But only if you protect them from impulsive damage. So the next time you feel that familiar surge, the tight chest, the restless urgency, the voice saying, just one more trade, pause and recognize it for what it is. Not opportunity. Emotion. Take a breath. Lean back. Let the moment pass. You don't have to act on every feeling. In fact, your profitability depends on not doing so. Say this quietly to yourself. I don't chase losses. I protect my edge. One more time. I don't chase losses. I protect my edge. If this message resonated with you, consider subscribing for more content focused on trading psychology, discipline, and emotional mastery, the skills that determine long-term success far more than any strategy ever will. And remember, the strongest traders are not the ones who win the most. They are the ones who lose without losing control.